All right. Cool. Well, thank you for everybody for coming today. We're very, very, very humbled for you to join us. We've got stellar lineup today. We've got Mike Fleming, who I'll introduce shortly. But I'm going to introduce myself. So my name's Denham Bird, and I'm the marketing manager here at A2X. For those of you that know about A2X, which most of you may, but those of you who do not, so we're a e-commerce accounting automation tool that essentially connects Amazon seller systems into popular accounting systems like Xero and QuickBooks. And we connect essentially every single marketplace through, and we basically disseminate all of the really complicated data that comes through from all of these marketplaces, and count for them in the right place. Now, we're very, very excited today to host Mike, and we're also very excited today to announce that we're launching a brand new tool, which is called A2X for Shopify, which is essentially the same great automated accounting that we've been doing for Amazon, and that we're now doing for Shopify as well. Basically exactly the same thing. We connect Shopify through to your accounting system, and so we do that specifically at the moment through Shopify payments, but we also handle other payment gateways as well. But for more information on that, we can cover that at the end of the webinar, or just head to a2xaccounting.com/Shopify. But without further ado, I'll introduce our main guest, which is Mike. Now, Mike Fleming is the founder of Michael J. Fleming and Associates, or Sales, Tax, and More. And prior to beginning this new venture, Mike spent the better part of a decade with an accounting firm that is focused solely on solving state and local tax issues. Now, Mike's state tax knowledge is well-rounded, but he is one of the country's leading authorities when it comes to e-commerce, Nexus, and dropshipping. Mike is often quoted in the press on these topics, and Mike is frequently requested speaker, sometimes presenting 2 to 3 live webinars a week and traveling across the country to speak at some of the biggest industry events. And Mike is a prolific writer, having authored an untold number of industry white papers, articles, and blog posts. Now, Mike was born in New York City, where he began his career on Wall Street. He moved to Dallas in 1989, where he met his wife, Dorina. And now they live about 30 miles east of Dallas in Heath, Texas, where they are affectionately known as the Heathens. And I'm very, very, very pleased to welcome Mike to this webinar. So I'll hand it over to you, Mike.
Thanks, Denham. Forgot to unmute myself here, but great introduction. I'm very happy to be here, and thank you everyone for joining us. We've got a lot of information to cover today, so just want to tell you a little bit about who Sales, Tax, and More is. We are state and local tax specialists. We work in all of the U.S. states, all of the U.S. territories, and Canada. We do have clients from across the globe, every continent, virtually most countries. We do consultations, research. We help companies with registrations. We do sales tax returns. If it's got something to do with state tax, we have a service to fill that need. But today we're going to cover the Wayfair case. So before we can tell you where we are now, there are some people out there who don't have as good an understanding as others. So we're going to talk about that. We're going to talk about Nexus, give you a quick definition. We're going to briefly touch on some court cases. A lot of people think we make this up as we go along. So we're going to talk about some Supreme Court cases. We're going to talk about economic nexus, which is a result of Wayfair. We're going to talk about the trends and the thresholds, what we saw when Wayfair, first came out, and what we're seeing now. And then one of the biggest trends here, and for those of you who are selling only on Amazon and other marketplaces, we're going to talk about marketplace collection. We're going to talk about physical nexus. We're going to briefly touch on what our view of the future is. We're going to touch on foreign sellers, and then what to do if you have nexus. So as we're going through this, I'm going to turn off my camera once we get into the meat of this. I sort of confuse myself if I try to look at the camera and speak at the same time. So,
also, sorry to interrupt, Mike. If we have any questions that come through, just fire them through into the box, and I'll start. I'll basically bring them all through, and then at the end we'll do a big Q&A, and I'll do them all then.
Great. Thanks, Denham.
No worries.
We always say, the worst time to find out you have problems is after a state contacts you. And, you limit, your options are limited once the state is giving you a call or sending you a letter. You have lots of options, if you're proactive. So, Denham, let's go to this first polling question, see who we have in the audience here. And while you're turning that on, I'm actually going to turn off my camera for the short time. When we get back to the questions, I'll go ahead and turn that back on. All right, so our first poll question is, how would you rate your Nexus knowledge? What's Nexus? I know the basics. I have an intermediary knowledge, or I am a Nexus expert, a Nexpert. We have anyone here who's going to keep me honest? Any Nexperts in the audience? Adam, can you see how the answers are coming in so far? What seems to be the consensus?
Getting some, getting it coming through now. Getting a lot of people that know the basics, about 50%. But then the next biggest one is I have intermediary knowledge.
Okay, that's about what we normally see. Mm-hmm. So right on par for the course here. And since we're not offering CPE credit, why don't we go ahead and wrap this one up?
All right. Let's first finish that poll right now. There we go.
All right. So since most of you know the basics, let's start with a quick definition. And up there you can see the results. So 57% of you know the basics. And so we'll start with the definition of Nexus. And Nexus, it's just a fancy word that means link or connection. And it's the link or connection that, you have to have with the state before that state can require you to either collect its taxes, like a sales tax or a vendor's use tax or a seller's use tax, or pay its taxes, like an income tax or a franchise tax, something along, or consumer's use tax, something along those lines. So it's just a link or connection. And it's not the end of the world. It all starts with Nexus, but if you don't have Nexus, then, you don't need to probe any further. You don't need to ask any more questions. No Nexus equals no problems and no responsibility. But if you do have Nexus, now you got to start asking yourself some questions like, is what I sell taxable? Are the numbers material? So we're going to touch on a little bit of this as we go through the presentation. But the first thing we're going to do is talk about Nexus. And it really all starts with Nexus. If you have Nexus, you could have further responsibilities. No Nexus, no problems. And whenever we say the word Nexus, just think link or connection with the state. So that's how simple that is. Now, I want to talk about a couple of court cases. We're not going to get into them very deeply. We have other webinars where we really get into the history, theory, evolution of Nexus, but these touch on some of the things we're going to talk about today. So I just want to, go over them real briefly. And the first one, these are all U.S. Supreme Court cases, by the way. And the first one, the takeaway from it is that the taxable activity does not have to relate to the Nexus creating activity. And what this simply means is, once you have Nexus in a state, all sales into that state, you need to collect the tax on, not just the ones that create the Nexus. I'll give you an example. A lot of people have inventory in an Amazon warehouse, which I know that a lot of people on the phone may say, on the call here, may say that, hey, inventory doesn't give you Nexus, but the states believe it does. And once you have Nexus in a state, then all sales into that state. So let's say you're selling on eBay and Amazon. Well, eBay doesn't really create Nexus, not a physical Nexus at least, but you still have to collect tax on your eBay sales because the taxable activity in this case are the eBay sales. The Nexus creating activity is the Amazon sales. So pretty important concept there. Next one I want to talk about is Tyler Pipe. And what this comes out of this case, very important language. You know, third parties who help you to establish or maintain a marketplace can create nexus for you. This is people who have no connection to your company other than they're performing some type of service for you. So, you know, true third parties. And this really catches up, you know, sellers who have agents doing something for them. They don't say, you know, even realize, how can a third party, you know, I don't control this person's hours. They, you know, they represent multiple people. This catches a lot of people by surprise. And then the third one, you know, especially when we're talking to Amazon sellers, you know, we hear this a lot, that the states don't have the right to even tax interstate commerce. You know, Congress is the one who's in charge of that. Well, you go back 90 years, 70 years, that was really true. Everyone believed that. But it started changing in the 50s. You started seeing that being chipped away. And then in 1977, you know, nothing new came out of this case, but the U.S. Supreme Court pulled together all of these different concepts, and they said, yeah, you can tax interstate commerce directly as long as it meets this four-pronged test. So very, very important case there. Perhaps the most important one, though, is South Dakota versus Wayfair, and that's the one that we're all here to talk about. So this overturned Quayle, and it overturned National Bellis Hess, and these are the two cases that referenced physical presence. So up until June 21st of 2018, you know, you had to have some sort of physical presence in order to create nexus. Now, people argued all the time as to what actually creates physical presence, but you had to have some sort of physical presence. Not anymore. You know, when they threw out physical presence by overturning these two cases, that opened the door for an economic nexus. And with an economic nexus, there is no physical presence required. An economic nexus can be based on sales, can be based on transactions. The state in question was South Dakota, and their thresholds, they said, we think that this is what creates nexus. It's $100,000 or 200 transactions. Supreme Court didn't explicitly say that that was okay, but, you know, they was implicit. They said, you know, sounds like it could be okay. They sent it back to the lower court, and it wasn't really addressed there, but most states ran out, and the majority of them, you know, copied South Dakota with this $100,000 or 200 transactions. A lot of the states include non-taxable sales in these thresholds. And here's a big one. Doesn't override physical presence. I've heard a lot of sellers, especially California. California came out and with this $500,000 threshold, they sent it out to all of their registered sellers, and all of a sudden, people who had, you know, physical presence in the state, who had inventory, started calling us up. And I said, hey, Mike, we want to deregister. And I said, well, how come? Well, because this email from California says that if we're a remote seller with less than $500,000 in sales, we can deregister. And unfortunately, you know, these economic thresholds, they don't override physical presence. And California is a state that believes that inventory in a state does create a physical presence, even if it's in an Amazon warehouse. So very important to remember that it's a new economic nexus doesn't override traditional types of nexus that are based upon physical presence. As of now, there are only 4 states that don't have some sort of threshold at this time, and here are the 4 states. Now, they're working on it. It's been in their legislature, but you know, they missed deadlines, or in Kansas, it was actually approved by the legislature, but because they tied it to a cut in food tax, the governor vetoed it. He said, we can't give up any taxes at this point. So it went back to the legislature. We'll see if these come out this year, but if they don't come out this year because of deadlines, and, you know, Florida, and they may do it in a special session, but definitely by next year. So all the other states have come out at this point with some type of threshold. And we've got a free resource on our website. The website is salestaxandmore.com, and we update this pretty regularly. You can see we updated it as of yesterday. And, it's the state, is it confirmed by the state, the effective date, what the thresholds are, how you calculate it, because some states look at prior 12 months. Some states look at previous calendar year. Some look at previous calendar year or the current calendar year. So lots of differences. And what's included in the threshold? There are states like Arkansas and New Mexico just came out recently. There's some of the newer states to announce thresholds, and they are excluding marketplace sales. So that's a big plus for those of you who are selling on marketplaces. Not all states are like that, though. Some states are, like California, they appear to be including sales through a marketplace. And one of the things you'll see is nothing's set in stone. This is very fluid and changing all of the time. So here's one of the big changes that we're seeing. It's a trend away from transactions. So we had California, Iowa, North Dakota, and Washington. They all came out, and originally they said $100,000 or 200 transactions, just like South Dakota. And then this year they've come back and said, you know what? We think that 200 transactions, that's too small a threshold. We think that it's much fairer to remote sellers if we eliminate the transactions. So you're seeing a trend. Here are 4 states that started with transactions, and they've eliminated it now. Alabama, and by the way, the yellow are states that have done something this year. The ones that are not highlighted are states that started out that way, and they're from last year. But we've got a number of states that have never had transaction thresholds. So Alabama, Idaho, Mississippi, New Mexico, South Carolina, and Texas, these are states that have come out and said, you know what, we're just going to go with a dollar threshold. And Texas came out with $500,000. California, when they did away with their transactions, they said, you know what, we're a big state. We need to have $500,000 as our threshold too. So this is a trend. We're definitely moving in the right direction. This is helping remote sellers out, especially smaller remote sellers. And I didn't expect to see this, to tell you the truth. I thought the states, hey, 200 transactions, we passed this, we're going to stick by this. But they're starting to become reasonable. So this is a good thing. Connecticut, New York have no standalone transactions. So there's a transactions involved, but it's an and rather than an or. So in Connecticut, it's $250,000 and 200 transactions. So that's the same almost as not having any transactions at all. There are Massachusetts and Ohio. These aren't really economic nexus. This is cookie nexus, which those states assert this is a type of physical presence, which is why they're going back before June 21st of 2018 and trying to enforce this, especially Massachusetts. Massachusetts is very, very aggressive now going back to 2017. But again, Massachusetts is $500,000, no standalone transactions. And Ohio has no transactions. They're also at $500,000. So this is good news. This is the new trend. Prospective enforcement. We want to talk about this. All of these states came out, because South Dakota talked about, not going backwards. They talked about we're only going to, chase companies going forward. And the reason why that was important, by overturning Quill and by overturning National Bellis Hess, it's like those cases never happened. And in theory, a state could pursue companies all the way back to the 1960s. And, the Supreme Court was worried about that. If these cases never happened, you never needed physical presence. That's really what the result of the Wayfair case is. So the states have said, hey, Supreme Court, we're not going to go beyond our effective date, which in theory needs to be June 21st or later. Here's the problem. Some of these effective dates are getting old. So, I would suggest don't procrastinate. there are already states that are questioning registrations. We have a lot of people come to us and a lot of companies, and they say, Mike, we didn't realize we needed to move on this so quickly. Can you get us registered with a date just going forward? And most states are currently allowing this, but we expect to see that change. South Dakota, very, very aggressive right now. They became effective on November 1st of 2018. And right now, they're pretty much every registration we do, they say, okay, did they have Nexus as of November 1st, 2018? And if you can't tell us that you didn't have Nexus, if you can't prove it, then we want you to file the last 6 months worth of back returns. So even though they're only doing this prospectively from the date of their effective date, these effective dates are starting to age. In New York, I don't know what's up with them, but they come out in the middle of July and said, middle of January, they said, oh, by the way, we've got economic nexus and you need to do this immediately. And then they come out, a couple of days later and said, oh, by the way, it goes back to June 21st of 2018. So we're coming up on a year in New York. So although these, economic nexus thresholds, the states say they're doing it prospectively, it's prospectively from the date that the thresholds became effective or that you crossed those thresholds. So you don't want to get too far behind. We expect more states are going to follow the lead of South Carolina and South Dakota. We're already seeing Wisconsin starting to ask questions. So this is something you don't want to put on the back burner. You really want to talk about this sooner rather than later. Here's some other developing trends. Some states are eliminating the affiliate or click-through nexus as they implement the economic nexus. So affiliate nexus, click-through nexus, this is, those schemes where if you have a link on your website and someone clicks on it and takes you to Amazon, or you allow people to link to you and you pay them some sort of referral fee or some type of commission if a sale closes within a certain amount of time, that can be nexus creating. And there are 20 some odd states with these types of laws. And because it's a type of physical presence, this relates to helping to establish or maintain a marketplace. That's the argument that New York used when they first introduced this back in 2008. This can, have a lot more exposure than economic nexus, which is pretty much within the last year or so. So when we start talking about physical presence, this is where your real exposure is. So although this is going away in a lot of states, the states are sunsetting it as they pass economic thresholds. Not all states are. Same thing with notice and reporting requirements. And notice and reporting requirements are about 1,000 times worse than the sales tax. We're going to get into it in a little bit deeper, but notice and reporting, they basically want to make your life so miserable that you have no choice but to go ahead and voluntarily register. I'm using the air quotes right now. I don't think there's anything voluntary about it. It's more like extortion to me. The penalties are so high. But we're starting to see those go away. So Washington, it's gone away. Rhode Island, Washington going away this coming July. Rhode Island also going away this coming July. Oklahoma has legislation pending. But we don't see anything happening in Puerto Rico. We don't see anything happening in Pennsylvania. There are about 13 states or so that have notice and reporting requirements, but a lot of them don't have a lot of teeth in them. But when we start talking about notice and reporting, I say forget about it. This is my New York accent. Forget about it. Because I make jokes. My cousin Tony's a loan shark. In New York. Not really, but it's a good story. But the loan sharks would be absolutely jealous of, the penalties on these notice and reporting requirements. Oklahoma, it's number one, it's a $10,000 threshold. And on just $10,000 in sales, there's three things you have to do. You've got to, have a notice on your website stating that you don't collect tax. So therefore, your customer needs to report it, self-assess it, and remit it to the state directly. Then there's got to be a notice at the point of sale. Then at the end of the year, you've got to send out another notice, and then you got to turn over your customer list to the state. And if you miss one of these things, it's the lesser of 20% of the preceding 12 months volume or $20,000. And, if you only have $10,000 in sales, you probably, 20% of that is $2,000, but it's per incident. And, if you're selling a $50 item, how many items does it take to get to $10,000? You could easily have fines and penalties in the six-figure range, mid-six-figure range. So forget about it. I mean, this is much worse than a tax. So the reason why we got this is the states literally want to make your life so miserable, you'll voluntarily register. In Washington's normal penalty is 39%. These things are, in Oklahoma, it could be a couple $1,000%. In Washington, on $10,000 in sales, if you miss all three of the things, the minimum penalty is $45,000. I mean, that makes this 39% penalty seem like peanuts. And, a lot of people say, well, how? The states can't do this. Well, it's been 7 years in litigation almost. And it's been to the U.S. Supreme Court twice. This actually was the case. It's the Direct Marketing Association versus Brohl, where Justice Kennedy said, hey, this is not the right case. As a matter of fact, this isn't even a tax. And they sent it back to the lower court where Judge Gorsuch at the time, said that Colorado could move forward with this. But Kennedy said, if you send us the right case, then we will think about overturning Quill. And that's how we got Wayfair. But this is going away. However, you got to pay attention to it because it's not gone yet. Puerto Rico is a big one. The thresholds in Puerto Rico, there is no threshold. It's if you're selling, you're a remote seller. If you don't have any type of physical presence, then this applies to you. And the penalty's there. It's $100 for each notice that you don't give at the point of sale. Then you got to do quarterly reporting to the Treasury Department there, and that's a $5,000 penalty if you miss it. And then you got to send an annual notice to each one of your customers, and that's a $500 penalty for each one you miss. So, I mean, the penalties on this are just absolutely horrible. And then we talked about the penalties in Oklahoma and Washington. So we've got another chart here. We suggest you take a look at it. This one's been updated also to include Puerto Rico. We were just following states up until this point, but some of these are going away. Some of them don't have penalties. The ones you want to pay attention to are Pennsylvania and Puerto Rico right now. These are the bigger ones, and Oklahoma. I mean, if Oklahoma doesn't, pass this legislation, then that's going to be a problem also. This chart's a great tool, and I suggest, if you're, trying to figure out where your exposure is and where you should get registered, this is something that you want to look at. And again, we update it whenever we get new news. All right, Denham, you want to go to the next poll question? All right.
Yeah.
Thank you. This poll question, which one of the following most describes your business? I sell on Amazon only. I sell on Shopify. I sell on my own website or a site similar to Shopify. I sell only on marketplaces in addition or instead of Amazon, or I sell through a combination of the above.
All right, we're getting some pretty interesting results come through. Got quite a lot of people coming through, about 60% coming through saying that they sell on a combination of the above.
Okay.
Mm.
And this is going to be important as we roll into the next topic of conversation, because we're starting to see a real dichotomy here. How marketplaces are being treated differently than the rest of e-commerce sellers. So, all right. So for those of you who sell only on Amazon, about 21%, they'd say it's basically good news.
Yeah.
And it's neutral to bad news for everyone else. I'm sorry. I can't give all good news today. That's just not something we can do. But the trends are moving in sellers' favor, especially if you are on a marketplace, and not just Amazon, any of the marketplaces. So there's a light at the end of the tunnel for you. If you're selling outside of the marketplaces, on your own website or through Shopify or a similar site, then you're going to be the prime target that the states are going to be looking at over the next 18 months or so. We're already starting to see states like Utah. One of our clients got a call the other day, said, "Hey, Utah called me. What's up? I'm already registered there. Can you call them and see what's going on?" So we called Utah and they said, "Well, we purchased a list. And, our start date was January 1st, 2019. So we're going to go through this list, call every company on it, send them out whatever information we have, and make sure that that all of these companies are registered." And we see this just as the beginning. This is, just the first state to get a list like this and to aggressively start pursuing companies. And the guy in Utah said, "Hey, this is a brand new program. We're just starting." But it's something that I think that we're going to see other states duplicate. So if you're selling on marketplaces, things are getting better and better quickly. But if you're not, it's about to get pretty ugly. So, marketplace facilitators, a marketplace, that's like an Amazon, an eBay, an Etsy, a Walmart. So far, 25 states have passed legislation, and a lot more are pending. And what that means is that by end of this year, marketplaces will be collecting for third-party sellers in roughly 25 states. It may be more. And by this time next year, we predict most states, if not all states, but definitely most states, will have passed similar legislation. So if all you're doing for that 21% who sell on Amazon only, you still got to, make it through the short term here. But by the end of next year, I don't think that you'll have very many problems with sales tax collection. There's a couple of states like a Washington where you still got to worry about the business and occupation tax. So you'll need to continue filing in Washington. And if you're a very large seller, Connecticut has, a clause in their statute that says if you're over $250,000 in sales into the state of Connecticut, you still have to file, but you can be an annual filer. So there'll be a handful of states where you still have to do something, but by and large, most of these states, you will not have to be doing anything. As of today, Amazon is currently collecting, or actually when I did this slide, so as of this past weekend, Amazon is collecting in 12 states, and eBay currently collecting in 7 states. eBay is lagging behind. They didn't collect anywhere until January of this year, so they're way behind the curve, but catching up. That 12-state number will grow to 25, I believe, by the end of the year. Etsy currently collecting in 10 states, and Walmart currently collecting in 9. These states are not as quick as Amazon, and we expect them to pick up the pace also. Got a great chart out on the website there, and this identifies the states. We also follow 4 of the bigger marketplaces, Amazon, eBay, Etsy, and Walmart. We tell you whether they're complying or not. We tell you what the effective date of when the marketplace actually is supposed to be collecting the tax, and then some of the additional notes there. So again, when you're trying to determine, should I register, should I deregister, we've got some great resources up on the website there. Now, be careful of what you ask for, because just because Amazon is collecting or the marketplace is collecting, it's not always a good thing. Nexus is still created. So remember we said if you're selling on your own website, and we talked about the National Geographic case, and if you have Nexus, then all sales, well, Nexus is still created if you have inventory in a state. You need to collect the tax for the other channels. So that's one thing. Some states, you still have filing responsibilities, very few, but there are some out there, Washington and Connecticut. States are still pursuing sellers for past sales tax, so that's still a problem out there. No one has come out and said we're going to give everyone an amnesty, so especially California, they're still pursuing. I know people talk about, the treasurer out there. That's all politics, though. I mean, it may happen, but I hope it does happen, but they'd have to do so many refunds and everything else. California doesn't have the money to be doing that, so I just don't see it happening, but I've been surprised before. Here's a big problem, and we're starting to see some states. We just had a client in Ohio get a call from Ohio, and it's about the commercial activities tax, which is their version of an income tax. And I think this is going to become a bigger issue. Once the states get all of this information that Amazon has, they have it at their fingertips, they're going to see who the big sellers are. They're going to see the amount of sales tax that's getting remitted to the states. And this is going to be the next battle for marketplace sellers. The states, whether it be 18 months out, we're going to start to see more, but it's going to be a trickle at first. And then at some point, they're going to be coming after all of the larger sellers. If you're, a $100,000 a year seller, I don't think the states are going to, spend time pursuing you. But if you're a big seller, income tax is my prediction as one of the next big issues. All right, Denham, do you want to go to the next slide here?
All right, let's bring it through. There we go.
All right, I don't need to register in a state if I'm under a threshold, even when I have inventory in a state. True or false?
Wow, we've got a lot of confidence coming through.
All right, are they confident true or confident false?
Cool, let's give it another, just wait for everyone to come through. All right. Confident false. Can everybody see the result?
Yeah, I can see it. I'm just looking at it here. That is correct. You do need to register. So for all of you who answered false, great job.
Nice.
All right, so let's move on. And this is important. Physical presence still creates nexus. It's not replaced by economic nexus, nor is it superseded by economic nexus. It is not prospective, and this is the important part. States will go back to the date that your nexus began. So what types of things can create nexus? We're going to just briefly touch on this. We talked about third parties. Anyone who is steering you business or making sales for you, that can create nexus, whether they're an employee or whether they are a third party. And because this is such a big umbrella of helping to establish or maintain a market, here's a whole list of activities. It's not exhaustive, but if you have third parties who are doing any of these services, what I like to say is if the third party is facing the customer, if they're interacting with customers, there's a good chance that that's going to be nexus creating. If they're a back office person, like you've got someone doing accounting for you or bookkeeping or even someone developing software, these types of functions generally are not going to be nexus creating. Travel. It's not just where these independent contractors are located. It's anywhere they're traveling on your behalf. Now, some things are easy to see. For example, if you've got someone doing training for you and you're billing your client for reimbursement of travel expenses, that can show up in someone's audit. That's a way that companies are found. But if you just have a salesperson going into a state or an independent contractor doing sales for you, that's a lot harder to find. But travel, anywhere that employees or independent contractors are traveling on your behalf to help you establish or create a marketplace, then that is going to be nexus creating. Inventory, we've talked about this, and 21% of you are Amazon sellers, and I know a lot of Amazon sellers don't believe that inventory creates physical presence, but the states do. It doesn't mean that you have a responsibility to collect the tax. I think there's a great argument that Amazon should be collecting it, and they're going to be doing it going forward. Going backwards, the states aren't enforcing that. They're still believe that sellers at this point are responsible for all of that past exposure. Related entities, I see a lot of schemes where people say, well, we're going to have this company set up in the United States, and we're going to create a second company. Related entities can create nexus for one another if they're performing services. Just remember this: if third parties, people who aren't related, can create nexus, how much easier can it be for related entities? So just keep that in mind. And here's a big one. I hear this even from CPAs. This is pretty much on a daily basis. Well, my client has a virtual office, so he doesn't really have an office anywhere. And unfortunately, that's not the way the states look at it. Where you live or where you operate your business from is generally going to be nexus creating. Where you have employees, remote employees, if you let someone work from their home, that it can be nexus creating in a lot of states out there. States like Michigan and Arizona. If you have employees in those states for pretty much any reason whatsoever for greater than 48 hours, then it's going to be nexus creating. There are some carve-outs for trade shows, but pretty much most other reasons. All right, so what does the future hold? I think that it's going to be, get very tough out here. The states are just starting to get their arms around this. They're beefing up their discovery units, and they will be looking for companies just like Utah. I think that they're going to start out looking for economic nexus, but while you got someone on the phone or while you're sending them a nexus questionnaire, they're going to stumble across all types of nexus. So, you'd be surprised at how many companies have independent contractors in 40 or more states, and they've never been registered. And those are some of the companies that are going to be hurt the most by, these states as they become more aggressive because they have years of past exposure. States are going to make examples of companies. They always do. It's, this is brand new and they want people to comply, and what better way to get people to comply than make some examples of some of your competitors, some of your friends. So unfortunately, I see that becoming a bigger issue. Past exposure is still going to be an issue for Amazon sellers. Here's the good news. By next year, Amazon or the other marketplaces will be collecting just about everywhere. So it's not all bad news. Now, international sellers. A lot of people tell me, well, Mike, international sellers, there's no way for states to pursue them. Well, I do a lot of business overseas. I've spoken in China. Supposed to go to China, as a matter of fact, in June, but I got a conflict. I'll be speaking at the IRCE in Chicago. And there is an interest, and we're starting to see the foreign sellers really start to get compliant here in the U.S. And here's a case study we had. This is a company from mainland China, and they had a representative in Canada. The state of Washington, found them, reached out to the guy in Canada, and he went back to mainland China. They said, hire someone in the U.S. So he reached out to me, and he said, here's what we want you to tell the state of Washington. And they had been selling there for 10 years, and they wanted the inventory event detail report and 7 years of sales reports. So there's no way this company wanted to do it. They told me to tell them, hey, we're in China. Good luck getting your money. We'll register on a going forward basis, but we're not going to pay you any back taxes. Well, the state of Washington said, okay, you don't want to cooperate us. Here's what we're going to do. We're going to make up the numbers, and made up numbers generally going to be worse than the real numbers. We're going to do an estimated assessment. Then we're going to give you 30 days to pay that assessment. If you don't do it, then we're going to levy your Amazon accounts receivable. And if you're selling on Amazon, you probably get money in Amazon. Then we're going to put a lien on the inventory in Washington, and then we're going to start putting liens on inventory in the other states. If you got any U.S. bank accounts or merchant accounts, we're going to try to levy them, and then we're going to pressure Amazon to ban the seller. Now, people say, well, they can't do these things. Well, I've not seen them do it to Amazon, but I've seen California do all of these things. So they go after accounts receivable at your customers. So yes, it can be done. What happened here? The seller blinked. They didn't want to have to, deal with all of this and made up numbers and everything else. And they went ahead and they settled with Washington. All right. So what should sellers do? If you have Nexus, so the first step is to figure out, what your Nexus footprint is, where you have these links or connections with a state. Then you got to figure out in a state where you have this link or connection, is what you sell taxable? And if it is taxable, is your exposure material? For example, you're selling 200 items at $5 an item, that's $1,000 in sales. Does it make sense to get registered? State says you should, but I think we need to use common sense. So as I mentioned, materiality is my comment, not the states. Most states believe you should register from $1. I say, who cares what the states think in this interest? Let them come and find you, because a lot of times it is actually better for you to wait for the company to wait for the state to spend their money and come after you for, on $1,000 in sales, it's going to be $80 in tax, maybe another $80 in penalty and interest. That's $160. It's going to cost you more to be compliant. So we've got to use common sense. We got to look at whether our exposure is actually material. And if it is material, then we've got to decide whether we are going to register prospectively, which is simply means we're going to get registered going forward. We're not going to worry about the past history. We're going to register historically, which is what the states want you to do. Use the actual date that your Nexus began. Or you can register through a voluntary disclosure agreement. A voluntary disclosure agreement, you're still going to pay the back tax, but instead of paying it for 6 or 7 years, maybe you pay it for 3 or 4 years. And it also waives penalty. Some states like Texas, it'll also waive interest, but in general, most states don't do anything for the interest. So if what you're selling is taxable, if you have this link or connection with the state, and if your exposure is material, I greatly suggest moving forward, don't wait, because that exposure just continues to build. All right, and at this point, let's open it up to questions. Adam, you have any good ones?
We do. We've got quite a few. I've actually got a couple of ones that came through on email past couple of days. First one this is an article I'm just going to post into the chat now. It was like an op-ed on the LA Times, basically about Assembly Bill 147 that California just responded with, which essentially requires that retailers collect sales taxes from buyers in California, even if the companies have no physical presence in the state. So I wanted to get an idea to see if you had heard about California taking aggressive action, and if so, what should sellers do?
Yeah, California is one of the most aggressive states out there. And if you are selling on Amazon, there's a good chance you already have a letter from California. And if you already have a letter from California, the way it stands now, doesn't look like California is going to grant amnesty. I spoke to California last week, and they tell me that there's going to be another round of letters coming out telling people that they're being sent to collections. So when you get that letter, that's when California is getting serious. And if you see that they're either going to send you to audit or send you to collections, you got to call them. There are a couple options you can do. One is a managed audit. That's, you still got to pay the back tax, but it will generally, you'll be able to waive the penalty and 50% of the interest. So that's better than paying 6 years of back tax plus penalty and interest. They also have a program, it's called the 1032 program. If your exposure isn't that long, it's a much cheaper program to go through, a lot less intrusive. In that one, you still have to pay the back tax, but they'll waive the penalty. So, and going forward, California, their effective date is April 1st of this year. It's a $500,000 threshold. So if you don't have inventory in an Amazon warehouse or any physical types of nexus, but you are over that threshold, that's going to be one of the next states that becomes aggressive in pursuing that.
Okay, great. Next one I've got is if seller is using a sales tax provider or product like TaxJar or Avalara, how can they have confidence that the tax they're being told to pay to the states has actually been collected by Amazon?
Unfortunately, because of the way that some of those companies calculate your returns, it's not going to be accurate. It just isn't. You've got to go with someone who's going to balance to tax collected, who actually looks at the tax you're collecting and is going to do your returns that way. Some of the software companies out there, and I don't want to mention anyone by name, but it's a big one, they do what's called a forward calculation. And, they've got some of the best reports in the industry, but they don't look at their own reports when they're doing your returns. What they do is recalculate everything, and then they file based upon what they think you should have collected. And I've had many conversations with them, and I told them, this is just absolutely wrong. If you guys want to really move up the ladder and start working with bigger companies, you have to look at the tax that's collected. People don't want to remit what you think they should have collected. So there's an inherent problem with some of these software companies. Now, one of the ways you can be sure, if you're working with someone like us or some other accountant or someone who's, actually balancing to tax collected, is using a system like A2X. Where it's going to pull out the information, make it easy to understand, and you actually know the tax amounts that you've collected, and then you can compare them to the person who is actually doing your returns. Now, if you're using a software company, I encourage you to do the same thing. And if there's a mismatch there, that's a problem. And I suggest finding a new provider at that point.
All right. Let's jump into some of the Q&A ones that have come through. Let's jump into David's question. So if I use a drop shipper in a different state, do I have Nexus there? I technically don't own the product.
All right. So in most states, just using a drop shipper does not create Nexus. Now, some of the states like Tennessee and Pennsylvania have language that you own title to that property, even if it's only a short period of time while it's being shipped out of the state. And they could make an argument that that's Nexus creating. In reality, I've not seen these states make that argument. So could it happen? Yes. In practice, does it happen? No. Pennsylvania even has a certificate that says that, hey, I don't have Nexus in Pennsylvania, so therefore you can accept this certificate and I don't have to be registered in Pennsylvania. Basically, you check box 3 in the form, which says this is a sale for resale. You check box 7 that says we don't have Nexus in Pennsylvania. So can they do it? Yes. Do we see it happening? No. Now, for drop shipping, the bigger issue is, does your supplier have Nexus in that state where you're asking them to ship to? And if they have Nexus, then they should be asking you for either a certificate that's acceptable in the ship to state, not where you're located, but where they're shipping. And if you can't provide that, then they need to charge you the sales tax. And we're going to see more and more of this happening. So drop shippers are going to be getting hit from both sides. They need to figure out where they need to be collecting the tax, and they need to be figuring out what type of certificates they can get so that they don't have to pay the tax to their supplier.
Great. Hopefully that answers the question for you, Dave. Next one, by Tanya. How are locality states like Alabama and Louisiana implementing economic nexus?
Hi, Tanya. How you doing? I know Tanya. This is a tough one, and it's going to be state by state. So right now, you've got the simplified seller's use tax in Alabama. So if you're a pure remote seller and you don't have any physical presence there, this is a special type of registration. There's one person in Alabama, and I can't remember her name, but you got to fax her an application, and she'll approve you for the program. Then you charge a single rate for the entire state. It's 8%. You don't have to worry about filing for the local jurisdictions or collecting or anything else. Everything is handled through that simple registration. The problem is if you do have physical nexus in Alabama, then you're not allowed to use that program. In Louisiana, they have a similar type program. And the problem is right now that the returns have to be done being mailed in, I believe. So it's, for some people, it's a good program. They're working on getting it better. But this is all fairly new, so it's still unfolding. Colorado, which is another home rule state, which you got to worry about the local jurisdictions. By the end of this month, supposedly there's going to be a much new and improved website out there. We're going to get better guidance from the states. A lot of those in my profession, are looking, you have to cross the thresholds in each of the individual parishes. Others are saying, these parishes or these counties or these cities can pretty much set it up as they go. I've sat in on some of the streamlined sales tax, and, the Council of Mayors is saying we want a piece of our action. So it's all in a state of flux right now. I don't have any concrete answers for you. By the end of this year, we'll have more answers in states like Louisiana. But if you're a pure remote seller, that's going to help you out better than if you do have physical nexus in some of the local jurisdictions and not in others.
Great. Hopefully that answers your question, Tanya. All right, next one's coming up from Mike. And so in states like Washington, if N&R requirements are going away in a month, are they still trying to enforce this?
Washington hasn't been overly aggressive in enforcing it of late because they do have the economic nexus thresholds in there. So if you're over the economic nexus thresholds, you don't have an option for the notice and reporting requirements anyway. But the law is still on the books. And if they find you, technically, they could impose it. States, as we said, they like to make examples of people. This has been on the books since January 1st of 2018. So, it's I don't have a crystal ball. I can't guarantee you that they wouldn't do it. You would think that they wouldn't do it, but I never use the word common sense and states in the same sentence.
All right. Okay. Next one from JK. Do you still need to register with states where Amazon collects sales taxes?
This is going to be depending, and I see the qualifier here. They're only selling through Amazon. So in most states, you can deregister once Amazon starts collecting the tax. Right now, like in California, and deregister because California is not going to start collecting the tax until the fourth quarter of this year. So you still have to be registered. You still have to collect until Amazon actually starts collecting in California. But in states like New Jersey, you got to look at how their laws are written. Some people say, well, you still need to be registered and file $0 returns. In most states, they'll tell you that you don't have to register anymore. or you can actually deregister. If the state doesn't say something like that, you got to look at, are the fees and penalties based upon the sales tax owed, or are they based upon a return not being filed? And if they're based upon the sales tax that's owed, I say, who cares what the state says? Because, if I deregister, what are you going to do? I mean, any fine or penalty you give me is going to be based on the tax I owe, and I don't owe any tax. But if it's based upon, if there are penalties for not filing a return, then that's something that you may want to stay registered in. And then states like Washington, where there's a second tax on the sales tax return, you'll want to stay registered there. It's a depends, but the in general answer is no, there's no reason to stay registered, and you can start deregistering.
Great. Good. I've got another one that's come through from the comments here. I thought it was quite interesting. There's a couple of them. First one is, if you're below that financial threshold but have inventory in that state, what's the best way to go?
Well, it depends on, are your sales only through a marketplace, or are they through your own website as well? And you got to look at materiality. So not how much inventory is stored there, but what are your sales into that state? What's your potential exposure? And if your potential exposure is large, then you've got to decide how you're going to move forward. Is it going to be, you're going to roll the dice and register prospectively, which is a big no-no for the states. If they catch you, they're going to, slap you hard. But a lot of sellers are doing that anyway, especially the FBA sellers. More of your traditional sellers are looking at doing VDAs or historic registrations. So not only is it going to be a state-by-state issue, it's going to be a seller-by-seller issue. But doing nothing, I don't think is an option. I think you've got to do something if your sales are material.
Yeah. The next one I think would be quite helpful for everyone is like, if you're using Fulfillment by Amazon, how do you know where your stock is to work out if you have Nexus, specifically for international company?
Well, you can always go into Amazon if you like pulling your hair out, and they have an inventory event detail report. The first time I tried to do this, there were only 7 Amazon warehouses. This was, 8, 9 years ago, 10 years ago, maybe. It took me like 18 hours to figure it all out. So it's a lot. It doesn't take me that long anymore, but Amazon doesn't make anything easy. So I would use a service, Denim, like yours. The A2X, you've got the wherestock.com, which you've rolled up into A2X accounting. And is it still $39, or I'm not sure how it's priced?
Yep. One time.
Right. So to me, I'd much rather pay $39, have someone tell me where all my stock is, rather than going and trying to figure it out myself. But if you want to do it, if you're a glutton for punishment, inventory event detail report, that's the way to go.
Fantastic. All right. Next question by Teresa here is, are any Canadian taxes being collected and remitted as facilitator to the provinces?
Not as of this point. I don't even know of any plans for that yet. So Amazon has warehouses in Alberta, which you don't have to worry about the local taxes, just the GST. Ontario, you've got the GST, HST, which is the same registration that covers Alberta. And then they've got warehouses in British Columbia. So generally, most FBA sellers are getting registered in British Columbia, and for the federal level GST, which comes along with 5 local provinces. But I don't see where Canada plans on making Amazon collect and remit the taxes directly to Revenue Canada or British Columbia, or whichever the province is.
Okay, great. Oh, and just coming back, the where stock tool is actually a part of A2X now. It's called inventory locations. So always better.
Okay.
Next question that we have is, with the marketplace facilitator tax being implemented, should we deregister our sales tax license in those states that Amazon is collecting, assuming our only sales for those states are through Amazon?
Did we do that one already, or did I answer that one even though I thought I was answering another one? The answer is, if Amazon's collecting and you're only selling through Amazon and it's not one of those special states, then go ahead and deregister or don't register.
All right. Now, if I, let's go for the next one here. So how does a foreign company register with the state since they don't have any US tax registrations?
That's one of the areas that we specialize in, and each state has a special process. Some states, it's fairly easy and very similar to the normal process. Other states, we've got to do paper registrations and call our contacts and let them know this is a foreign. In a state like Maryland, we've got to prepare affidavits. So foreign sellers can get registered in every state, although there's a little bit of extra work involved.
Okay.
So, paper registrations, if you're trying to do this on your own, that's usually the way to go.
Okay, great. Let's jump into this one here. Funny, one from Jennifer. Does attending a trade show create nexus?
This is one of those questions that we're going to say it depends a lot in sales tax. And this is one that really depends. Depends on the state and it depends on the activity. There's really 4 levels. So some states, make the assumption that even attending a trade show as a consumer, just going and being at a trade show is nexus creating. Now, I think that they would be hard pressed to actually make that case in court, but they say it. Most states, though, say you can attend as many trade shows as you want as a consumer, but once you become an exhibitor, that's nexus creating. The next group says, hey, you can even attend a trade show as an exhibitor, but once you actually start soliciting orders. Now, I don't know how you split hairs like that there, and some states don't, but once you start soliciting orders, then that's okay. The next group says, hey, you can even solicit orders, but you can't accept orders while you're here. And if you accept an order while you're here, that's nexus. And then you've got Nevada, which says, hey, you can even sell things here, while you're at the trade show, so long as you don't do it more than once a year. It's not nexus creating. We want you to collect the tax. And, at the end of the show, you give it to the promoter. If you can't find them, then when you get home, just mail it to us. No questions asked. So lots of levels in there. It's also a lot of exemptions like California. When states really don't line out de minimis exemptions very well. But when it comes to trade shows, they do. For example, California says if you're there for less than 2 weeks and less than $100,000 in sales is generated as a result of the show, then it's not nexus creating. They're the most liberal of all the states. Some states, use 2 or 3 days. A lot of states don't even have de minimis exemptions. You're there, it creates nexus. So it's really going to be a state-by-state answer.
Fantastic. An interesting one here is from Donna. How do the thresholds work? Do I collect no taxes until after I reach the threshold, or do I only collect taxes on the sales made after the threshold is met?
Yeah, only after the threshold is met. So this is a big question. The look-back periods are how you determine if you've crossed the threshold, but you don't have to worry about collecting the tax during the look-back period. It's only from the point going forward from when you actually cross the threshold. So that's that is a great question. And a lot of people ask that same question.
Okay, let's jump through here. So we got one from Mike here. Our suppliers are charging us sales tax on our inventory. If Amazon is collecting on our behalf, how do we collect the tax to reimburse the supplier?
The way that the sales tax system in the U.S. works is they want you, the states want you to issue a resale certificate. And if you issue your supplier a resale certificate, a valid resale certificate, it's got to be valid in the ship to state, then that supplier should not charge you sales tax. So in some states, especially if you have Nexus, you got to be registered in order to do that. So if Amazon's collecting all your sales tax, you may not have a filing responsibility, but if you want to get out of paying your vendor the sales tax, you got to register voluntarily and then file $0 returns. So there are 36 states where if you don't have Nexus, there's some sort of alternative documentation you can submit to the vendor, which doesn't require you to be registered, but that's only if you don't have Nexus. And there are 10 states, California being one of those 10 states, where the state will only accept a resale certificate if you are registered in that state. So 10 states, it's going to be real tough. So for those sellers who are using drop shipping and they're selling through Amazon, even though you don't have a responsibility to be registered, in order to avoid the tax, you may have to register in a number of states and then file $0 sales tax returns.
Right. One here from Peter here. If for a Canadian resident shipping into the US non-marketplace, are there any enforcement options to US states?
I'm not sure I understand the question. Could you repeat that?
So for a Canadian resident shipping into the US, are there any enforcement options to US states? I guess, in other words, how
do the US states come after them?
Yeah.
Right now, it's pretty tough. So they will threaten and bluster. But if you don't have any inventory in the U.S., if you don't have any bank accounts in the U.S., if you don't have a Payoneer account or a similar type account in the U.S., it's going to be real tough as of today. But what I predict is once, the states, consolidate the domestic sellers, there's going to be such an outcry against foreign sellers because all of the U.S. sellers are now collecting. And, like this person asking this question, well, you can't catch me, so therefore I'm not going to do it. They're going to, take measures like they've done in the UK or like they've done in Germany and make Congress can all agree on that. If you want to, get Congress behind, when all of your taxpayers are saying, hey, stop the foreign guy from having an unfair advantage, Congress is going to get behind that pretty quick. I don't know what it's going to look like. I don't know if it's going to take, 18 months or 2 years or 3 years, but at some point, something will be done, and it will probably be retroactive like they did in the UK. So that's why we're starting to see more and more voluntary participation, because sellers are seeing the same thing that I'm seeing. At some point in the future, this is going to become an issue.
All right. Thank you. All right, we're going to do one more question before we wrap things up. And this one's come from Mark. Would telecommunication services be treated the same as digital sales and have the same thresholds?
Unfortunately, telecommunication services are treated differently on a state-by-state basis. And so that, once again, the answer is it depends. In some states, telecommunications fall under the sales and use tax. In other states, there's a separate tax. It's called a telecommunications tax. So it's exempt from sales and use, but it's got its own tax. If it's its own tax, then I would think that it's not going to be subject to the thresholds because the thresholds we're talking about are, in most states, are generally going to be related to sales and use tax. But digital products, software, all of those types of things would fall under the thresholds.
Great.
Telecommunications, though, different animal in some states.
Yeah, no, I definitely get that. All right, everybody, we're going to wrap everything up now. I know that there's a few unanswered questions still, so for those that have asked them, do not worry. I'm going to hand those off to Mike and his team, and they're going to get back to you with answers to that. And I know a few of you have also asked about information about where you can find information about the thresholds for the different states and everything else, and Mike will send you those as well. So yes, no one needs the fret, so that's all good. But thank you all for coming today. We really appreciate all of your time, and we're humbled for you to join us, and hope that you hope you learned a little bit more and got a little update, and hopefully you guys get on top of everything. Mike, is there anything you'd like to say?
No, I'd just like to echo what you said. Thank you, everyone, for spending some time with us this afternoon. I hope that this has been helpful. And if you have any follow-up questions, just let us know, and we will be getting answers to all of you, like Denham said, and we'll be getting out the charts that we mentioned today.
Perfect. All right. Thank you, everybody. Yes, this will be posted on YouTube and is also on Facebook Live. So if anyone wanted to rewatch it again or share it with anybody else, they're most welcome to. But all right. Thank you, everybody. And we'll see you again another time.
Take care, everyone. Bye-bye.
Bye.